Looking to build a cash position into market strength and assessing whether the October period looks to be set for a new low or a higher low. And then we're also going to be reviewing that travel sector to see whether it's set up for new trades. The man guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, no, I'm excellent, Chris. How you going?
Well, I'm enjoying your report and reading through this. The travel sector has been pretty favourable, pretty good for you over the last months and years for trading in and out. But for those who have been following your period and cycles with how you've been looking at the market, particularly the US market and timing, you were looking for a late June, early July low. You hit that bang on. The next period was mid-August that we're coming up towards, and then that's sort of helping map out what was the next low you were looking for, whether it was a higher low or a lower low in October. But that seems to be a bit of a function of what we're seeing in the market right now. So how do you assess what's happening in the market now and how that impacts the October period?
Yeah, look, it's really interesting here at the moment because it's obviously like we are sort of hitting the top of that channel there, as you can see. We're sort of although we've broken above the last sort of swing high, we are sort of going back up to the previous sort of swing low before that, a little bit of where that spacing was. So a couple of levels just there. Probably a little early here. Still got a bit more time to go here. And another sort of week or eight trading days, so to speak. But yeah, so just hitting a bit of a key level here. I noticed a few traders getting a bit nervous here, understandably so. But I just got CPI out too this week, which will be pretty interesting. So, but I don't know the actual. If you look at the actual depth of the market there, I noticed even like the NASDAQ. I haven't got it highlighted in this chart here, but we actually look at the volume going up, volume going down, volume going up. Volume's a lot stronger on the up days, and then contracts on the down days, and it's coming back in the market on the up day. So the actual market breadth is actually pretty healthy. So this rally so far has looked pretty healthy here. It's sort of the opposite to the last couple of rallies, which have been pretty weak. And so there's definitely a little bit of breadth to that. So I haven't seen, I think on maybe the S&P500 was seeing one distribution day, Chris. Other than that, the NASDAQ hasn't shown one distribution day yet. So normally I'd like to sort of see a cluster of sort of 3 or 4 what we call distribution days, so sort of when we're down on sort of heavier volume. And so far we haven't seen any. So so just it's interesting here. Just sort of we can see the technical levels for sure there. Just not seeing so far the breadth of this market is actually pretty healthy. So I just can't see too much there. So everyone's getting pretty cautious here as well. Maybe too much sort of on the one side here. Maybe the market needs to sort of entrap a few more people first here. Maybe this can sort of pop out of the range a little bit here. Maybe it'll go a little higher. And just maybe that'll bring a few more people into the market. Maybe those who are sort of still short or are underweight will feel a little bit forced to sort of join in just at the very worst time. Look, I don't know. I just say this rally has just been a lot healthier than I thought it might be. So that's sort of telling me maybe this can just push a little higher here. So, look, it definitely should be taking some off here. So far just looks a little stronger than I was anticipating. So, normally I might be rushing to get, to really get into heavier cash pretty quickly here and get some shorts on here. But market's telling me just to hold off doing that. Just might go a little further here first.
Well, it's not such a bad position to be in. It's the last couple of weeks have been the most heavily invested you've been for a very long time. So there are worse markets for you to be long in.
It might just overshoot a little bit here, and then maybe it'll come back down again. And so that October low, I was pretty convinced we'd actually come back a lot lower here, the US markets, into those sort of come back to retest that old highs here. But the strength of this move here just puts that a little bit in slight doubt. So I think the 60-year cycle, the market made a higher low in there. So maybe this is going to follow that. Maybe this might just make a higher low in October here. So it may not come down to the low. Might just so maybe it goes slightly higher, then comes But yeah, we're just sort of see what happens here. But at this stage there, price action is sort of still pretty firm. So everyone's still pretty bearish as well here. So that always sort of lends itself to going higher. So just need to sort of, market needs to almost trap a few more long players in here first, get all the shorts nervous, and get everyone enthusiastic about being long again, and then whack. So but yeah, let's see what happens here in the next week or two.
Well, if we move over to the Aussie, which is where most of your positions are, before we jump into the travel stocks and looking at where you'd be taking positions or lightening the load, looking at the Aussie, you've got a few levels here. We've touched on them in previous episodes, but you've mentioned 70.75 as sort of a level. Now, that seems short of the highs that we saw pre-COVID. So where's that 70.75? Where are you calculating that level?
Yeah, just looking under the last swing low there, because really that's sort of off the high. That was the first swing low on the way down here. So if we are sort of going to, if this is just a bit of a counter trend and going to a new low, that might be where it sort of fails here. Other than that, we've definitely got a, another level there around 71.88 is probably the next level. So just got to watch, see how it trades around that 70.75. Notice the market's just starting to slow down here. So that's what I thought. Initially, you sort of power up and then you sort of congest, but in an upward sort of grinding manner. So the last couple of days are sort of suggesting that. So maybe we just grind a little higher here for the next week or two. But yeah, just to see how we trade here. I think it will hang up a little bit here. Got reporting season obviously in Australia started to kick off, so that's get a few up and down moves within that. So yeah, well, yeah, should be an interesting week ahead here. But yeah, I still think we'll just sort of hang on, grind slightly higher. But that's probably the first level to watch there, is that 70.75 on the index there.
And are you still seeing similar sort of volume and breadth positive movements on the Aussie market? Are they notably different to the US?
Yeah, that's similar. Yeah, similar is not too bad. We saw a little bit of selling, I think 2 or 3 days ago, had that sort of reversal day. There was definitely a little bit in there. Definitely, like some of the stocks, I just sort of noticed that some of the stocks were just having that, it's almost like the release valve, sort of. I think we've recommended a few stocks like, Polynova, I think 360, we saw it. What else was there? Sort of, there was PBH, there was just a few other stocks that have had that nice little pop. And then they get going, and then they sort of sell off for a couple of days, and it's actually really, they let go. Even like MP1, they even let go pretty hard, but then they bounced again as well. So just getting a little bit of volatility within that move. So yeah, it's interesting market here, but yeah, a lot of things are still sort of recovering now, just sort of making some sort of deeper retracements there. Just trying to wash, the market's trying to wash us out, test us here. So yeah, it's sort of probably why you just got to give yourself a little bit of room here, I think, as I mentioned previously. So but yeah, it's some, I think it was sort of climbing here. It's sort of some reasonable signs there, but yeah, it's yeah, I guess I'll just see how we trade up into that range here.
Well, if we move to the individual shares that you've been looking at this week, we've got, starting off with Ramsay Healthcare, and credit to you, back in the market lows right at the start. You just mentioned a couple of them then, but that biotech space, you'd earmarked and said, look, there's a fair bit of action going on here, late June, early July. That's where you were deploying the capital to start off with, and that's where you were picking up the names to trade. And they did do well. But Ramsay seems to have done something different. Is that because of that takeover bid announcement sort of rocked the boat and changed their nature?
Yes, obviously with that sort of well, that, what do you call it, non-binding. Yeah, when I see those, I always doubt those. So yeah, I sort of for most of my clients actually that had Ramsay, I actually sold a few calls over them. I think I picked up, I don't know, maybe $4 or $5 for might have been $4 or $5 for an $80 call. I figured if you got done, 88 was going to be, upside there. So if you can get near that, I'm pretty happy. But I thought this, non-binding, just, those are probably 80, 90% of those end up just nothing happening on most of those. So it's sort of wound back. So although I don't get the full benefit there, I sort of I've still long the stock there, and I've managed to sort of take a $5 premium there, give myself a little bit of a win there, and I'm still long the stock for most of the clients there. But I still like this sector here. It's come back to a bit of a support line there, come back to a bit of a fib level, also come back sitting on top of the previous highs as well. Yeah, this looks pretty interesting here. I do sort of have my little concerns about this sector a little bit in the reporting zone there, because I just don't think they'll necessarily report well, Chris. But I do think that, because 2022 is probably not going to be a great year. So some of these healthcare players, they're sort of still coming out of 2 years of sort of COVID and all the restrictions and all the challenges they face there. But I do think that 23, 24 is just going to be big for healthcare, as that, the backlog of, elective surgeries, and I just think it'll just be a great sector moving forward here. So if reporting season does sort of throw up some opportunities there, definitely a sector I think we should be looking at here. But I just thought the price action looked pretty supportive there. So maybe it doesn't come back under 70 now, but yeah, it looks kind of supportive there.
Well, that's one that we'll definitely watch into reporting season and after. If we move to these travel stocks, so you've done really well out of these, and long-term viewers and listeners will note this market cap aspect that you've got here on the chart. Now, this one's
it's funny. I did that about a year ago, or maybe longer actually. And might have been actually October. Well, it's almost been 2 years ago, maybe 18 months ago. Sort of, I looked at this, and at the time that was obviously breaking up there, and I just thought, wow, this the market cap's getting, because literally Webjet done a massive 1-for-1 and told an offer at the low, so basically twice as many shares an issue. So that does sort of just put a ceiling on. That's sometimes, this is where sort of fundamentals can override technicals there, when you've got sort of displacements or rights issues, or lots more shares and issues. So in this case here, we've got a bucket load more shares and issues. So just always going to limit the upside there, just because the market capitalization is going to be sort of double with at the same share price if there's twice as many shares an issue, which is exactly what happened here. So I think at that level there, which is around that sort of $5 mark there, I just that was sort of, to me, that was showing the same sort of market capitalization as we were seeing at the peak for Webjet, even though at that stage there 2 years ago, the industry is on life support because of what was going on in COVID. And since then, obviously, the shares have sort of gone up and down a little bit, but really gone, pretty much gone sideways. So it's sort of, we're 2 years down the track here. That's why you sort of can't get too bullish or bearish. Obviously, you've got a recovering sector here, but you've also got, market capitalization issues there, having too many shares in issue. But at some point, the company will start to repair itself. The sector will open up. You might even find here, once they start making money, they might start to buy back some of their shares back as well. So, but yeah, 2 years down the track here, it's sort of, it's just interesting here. We're sort of at the same point. But yeah, we are sort of at the bottom of the sort of trading range here as well, just looking at our sort of trend lines. Interesting that was just sort of bounced off of here. But yeah, I guess with the travel sector there, I'm actually sort of quite positive about that sector, but I just think it's going to be time consuming as well. So it's not going to go straight up here. It's not going to be an aggressive pop here. I think it's just going to be a bit of a build here. So like travel stocks, I just think it's going to take a little while. I just think as they take a while to improve, I think the share price is going to be slow and steady as well.
Okay, so that's Webjet and the market capitalization aspects of it. Flight Centre, did they do something similar with changing their market capitalization and raising shares and that kind of thing?
Yeah, they have done, but just not the same sort of scale as Webjet. Webjet was a massive one there. So Flight Centre have done sort of something similar. So I think at the stage, I worked out around about 21.50 would be equivalent to the old 44. So I've sort of been buying the stock sort of what 16, 17, and then selling calls around 21, 22 is sort of my view on just looking at the old capitalization. So they can gives you an idea what sort of ranges and stuff to look at. So yeah, so I've managed to sort of trade in and out of the stock, sell a few puts down the bottom, sell a few calls at the top. So it's been pretty good space to be, really. So again, we've sort of just come back down to the bottom of the range again. We've done a little bit of flirting with the line here, but held off here so far. And but yeah, so I think it should continue to move high here, but it'll just be slow and steady here, I think, rather than anything too aggressive on the upside. But constructive, but yeah, slow and steady.
Okay, well, one that seems new but isn't necessarily. You've got KLS. So is there a name change in here for KLS?
Yes, it's the old C-Link. So yeah, so they've got ferries and stuff there. So I think they just really they were making a decent sort of size acquisition in the UK. So in transport sort of group over there. Yeah, but I think just because of the volatility in the sector, maybe putting pressure on the balance sheet here, obviously taking a little bit longer to sort of get tourism up and running here. They've pulled out of the deal, but then the share price was closer to $8 when that deal was announced. That's obviously put a bit of pressure on the share price. But I think now they've pulled out of that deal, probably should sort of see that that risk being alleviated, because it's obviously not there anymore. So it's a funny one here. Obviously, C-Link has sort of grown quite nice. It's been a pretty good business so far. So they do want to keep growing. But yeah, maybe just sort of waiting for being a bit more patient here, and just waiting for the sector to improve a bit more is probably the smart move here. So I think it's probably a good decision here. But I expect the share price to recover here sort of slowly here, and just sort of should grind higher.
Okay, well, one more in the travel space is Auckland International. Now, it looks like they've taken a fair amount of time to kind of go nowhere in a volatile market.
Yeah.
What does that mean to you?
Yeah, it's funny. I've been watching this. This sort of this stock's been on my radar here for probably 6 to 8 weeks now, just because of that sort of what we call a corrective decline there. So it's a bit of a sideways orientation. So when a market sort of goes down, but it goes down slowly in like a sort of sideways sort of consuming manner, and normally when it breaks out there, you get a move here. So it's obviously like that break we've got in July, October sort of last year. Once it broke out, it went for a bit of a run out of that. Yeah, popped out of there. So oftentimes when they sort of break out of these sort of sideways sort of orientations there, they can move here. And the reality is that most of these sort of good infrastructure assets have all been bid for. There's not many there. So in terms of positioning, so yeah, it's pretty interesting here. Like all these assets have been taken over here recently. So this is probably some risk of that as well. But should see some improvement out of Auckland Airport as well. Sort of New Zealand's a little bit just slightly behind. Australia's behind the rest of the world, but New Zealand's even sort of further. It's taken a while to open up as well. So it's been one of the largest, so one of the last to open up. So, but there should be some benefits there over the next sort of 12 to 18 months. There should be some upside there. So, so again, I think this sort of travel sector, tourism sector, I think is interesting here. The numbers are improving there, but they're still a long way off of what they were 2 or 3 years ago. So there's still definitely some upside for those stocks there.
Nice. Well, there's some to watch, and for those who want to keep on top of the videos, and you've mentioned a couple of things, or we've mentioned over the course of this, a few aspects that you've pointed, whether it was a couple of weeks ago, a couple of months, or almost 2 years ago. So they can watch that playlist on the right-hand side where they're consistently updated, and subscribe to get those updates. And then there's a volatility contraction pattern tutorial there to the right as well, which is something that you're often looking at for market leaders. And if anyone wants to contact you, is the contact numbers on screen the details to use, Gary? Yeah,
that's right. They can just email me or they can ring me.
Very nice. Well, thank you again for another update, Gary Glover from Novus Capital.
Thanks, Chris.